Hello guys, you're welcome back to my YouTube channel. This is Synthetic Goddess. On this YouTube channel, I teach strategies to become a profitable trader, even if you're a beginner. If you're new to this channel, kindly hit the subscribe button and turn on the notification bell to be notified whenever I drop any video. And if you're an existing viewer, you're welcome back to this video. In this video, I'm going to be sharing my weekly analysis with you, and I'm going to be doing that on the instruments Boom 1000 index. I'll be doing that on Boom 1000 index. I don't trade boom and crash, but I've had a lot of questions from people asking me if my strategy actually works on boom and crash jump indices. My strategy actually works on all financial markets and on all financial instruments. So you can use the strategy on currency pair, you can use the strategy on crypto, you can use it on any synthetic indices. So for now, I'm going to be showing you my analysis on Boom 1000 index, and you will see how the strategy works on Boom 1000 index. All you just have to do is follow all you need to follow all rules when it comes to the strategy. Just follow all rules and then you're very good to go and master the instruments or the pairs you will be trading. Master all the pairs you will be trading. So for me, for now, I'm going to be using Boom 1000 index for the weekly analysis. So this is our weekly time frame, and we don't have a whole lot of information on the weekly time frame. On synthetic indices, we don't really have a whole lot of stories. Let me put it that way. We don't have so much information on synthetic indices. We just make do with the information that we have. So right here we have a break. The last break of structure was to the upside according to this time frame. We had our last break of structure to the upside on this particular time frame, and this was the low that's made for that break of structure. This was the low that made for the break of structure. We have it here, and to know if this low is a major low, let's see what the low has done. We have an inducement. There's an inducement over here. We have this. The markets are induced. The market gave us inducement. So basically this low is our major low. This is our major low. Okay, we've not broken the major low, but basically with these impulsive movements to the downside, we'll be taking that low based on these impulsive movements, because we've been having a lot of impulsive movements. We've been having impulsive movements for some weeks now. You can see over here. So basically we might be breaking that low with this impulsive movement. So let's just check the daily time frame. Checking out the daily time frame, we have on the daily time frame, we've been trending to the downside. We've been having series of lower highs and lower lows to the downside. So let's just check our last break of structure on daily time frame. So basically our last break of structure, our last structure range break is this low. We had this last structure range break. Okay, this was the last structure range break. Here we go. And basically the market has been giving us a good balance. We don't really have so much imbalance here because the market has been balancing even after breaking the low. But let's just see the last break of structure and how the market got into those areas. As you can see, we had this place balanced already. We had the market test those areas properly. We had market test here properly. Market has been testing all these areas properly. So let's just check this out. Market tested this area properly. Yes, we've been having a good balance in the market based on this time frame, and we had a break of structure to the downside. Here is a break of structure to the downside, but basically the market did not get into this PO high. The market did not get into this SE candle, into our primary zone. So we'll be marking that out because market didn't really balance into that area, so we'll just be marking this area out, and I'm going to be marking the area the market used to continue to the downside. I'll be marking that area out also. Let's check out for the area the market used to continue to the downside. Okay, we used a bounce. Okay, the market continued to the downside with a bounce, and then we had this break of structure again. We had this break of structure to the downside, and basically this break of structure to the downside, the low that pushed it became a major high. The low that pushed it became a major high because we had amount of liquidity, we had inducement. So we had that break of structure to the downside. So let's just check the H4 time frame and see what the market is doing on the H4 time frame. Okay, so on the H4 time frame, as you can see, we had our last break of structure to the downside, and basically the market broke this area again and continued with a secondary inducement. The market took a secondary inducement and it continued the movement to the downside. The movement to the downside is so strong. So the last break of structure, the last internal break of structure that we have right now, and if the market breaks it, we are expecting the market at the PO high we already marked out on the daily time frame. So this is the last internal structure that we got. This was the last internal structure that we got, internal structure break of structure. Okay, this was the last internal break of structure, and as you can see, we still had some impulsive movement inside before markets broke it. We had this. So if the market is coming back, the market could do something like this and then continue a movement to the downside, give us a movement to the downside. But if market breaks this high, meanwhile on the daily time frame, we have this as a secondary inducement. Okay, we have this as a secondary inducement, but this secondary inducement has tested an internal structure. Remember, I am always saying if your secondary point of interest does not test an internal structure, then you are expecting the market to come and take it, or the market's going back to our primary inducement. Now this secondary inducement has entered into our internal structure, and this is the only one that did not enter so well into our internal structure. So the market could actually come back and use this area to continue to the downside. If market breaks this low, if market breaks this high, we might be using an area around this place. You can see an imbalance here. We have an imbalance here. Let's just mark out the imbalance. And basically on this boom 1000, even if I am not trading it, with this little analysis, I can see that the market respects imbalance a lot. So if you trade boom 1000, if you trade all this crash and boom 1000 respects imbalances a lot. Like, it respects it a lot. I've just seen that. Just based on this analysis, I can see that the market respects imbalances. So if you trade it, just watch out for that also. So we have an imbalance here, and remember, the market could actually use this secondary inducement. You know, we had our break of structure here. The market could actually use this as secondary point of interest, then come back into this area, come back into this imbalance. And also with this imbalance, we have a PO high here. We have a PO high here that was not tested. We have a PO high here. This particular candle is a PO high. So this is our PO high. So you can see the PO high is matching with imbalance. So if the market breaks this high, I am not still expecting it at the other PO high. I am expecting it to come into this place, give me a minor break of structure, and continue to the downside. Give me a minor break of structure and continue to the downside. But if the market breaks this high, because we had a good test here, if the market breaks this high, I am expecting it to break this high and come back into the internal structure that it did not test well. I am expecting it to come back into this area, then continue the movement to the downside. Remember, all I am always saying, we should have an entry confirmation before you enter into the market. Now, checking the 1 hour time frame, the market has so much been respecting structure. You can see we had break of structure, we had this break of structure to the downside. The market rallied. The market could not come back into this area because of the momentum to the downside. The market lost its momentum here but could not enter into this place. It just came back to grab a little liquidity, continued to the downside. We had another break of structure here. And the market used this area as secondary inducement, used this area to continue to the downside. Then we have another break of structure to the downside. The market used this as a secondary inducement. The market used this as a secondary inducement, moved up and continued to the downside. You can see we've been taking the secondary inducement and moving to the downside, and the market has been balancing itself. So where are we expecting the market to break before we go into that high? You can see we had this area as our last break of structure. This is an area for our last break of structure. So what will confirm us to go into our PO high is our readiness. The market must be ready to go back into our PO high before we just decide to wait for the PO high. If the market breaks this high, once the market breaks this high, I am expecting the market at my PO high. You're expecting the market to break this high, then continue the movement to the upside to get into our PO high, because basically you can see we have ounce of liquidity making that high our major high. We have ounce of liquidity over here making this high a major high. Here is a major high. So if the market breaks it, that is our readiness to go into our PO high. That is the readiness to go into our PO high. So basically, if the market does not break it, we are expecting a minor confirmation here to still continue to the downside. So we are of two opinions here. The market would use this as a secondary inducement. The market will use this as a secondary inducement, then come back into this area to continue to the downside. But if the market does not do that, what we are expecting is the market to break this high and go into our daily time frame PO high. It will go into our daily time frame PO high. But another thing I am saying here, we could actually have a reaction zone here also. If the market breaks that high, we could have a reaction zone here because we have imbalance here, and it's so obvious the market did not come back into this test and it gave an impulsive movement. So I'm marking this out also, and I'm checking it on the 1 hour time frame to see what the market is doing there. So if the market breaks that high, I might be expecting my market around this area to give me a good reaction. You can see we did not have this high tested as a secondary point of interest. This is a secondary point of interest for this movement, and we've not had it tested. So the market could actually break this secondary inducement and use this area to also continue to the downside. This is just all you need to look out for. Just look out for all of this and you are good to go. Boom 1000 is very easy to trade. Mere looking at it, you can actually understand the movement, you can understand what it uses, you can understand everything about it. It is not so hard, and also you can catch the spike with the strategy. You can do different things, and also see this area on even on the 15 minutes time frame. We had this inducement. There was this inducement, and after the inducement we basically categorize this high as a major high. This is a major high for us. This is a major high for us, so we are not expecting the market to break the major high. If there's anything you want now is for the market to come into this area and continue the movement to the downside. You just expect the market to spike up and continue to the downside. Also, to get your entry confirmation on the 5 minutes time frame is very easy. Getting your confirmation on the 5 minutes time frame is a lot easier. Let me just see if I could get something. Okay, so as you can see here, this is a minor confirmation on the 5 minutes time frame, a minor confirmation that we are going to the downside. This is a minor confirmation we are going to the downside, and the market entered into the internal structure again and continued to the downside. So this is just all you have to look out for. After we broke this high, after breaking this low rather, after we broke this low, the market created this as an inducement. The market created this as an inducement. It took it out and then it kept on selling to the downside. The market kept on selling to the downside. So all these are just what you need to look out for. Just follow the strategy and it's going to work perfectly for you. That's going to be all for now, guys. I'll see you in the next video. Have a lovely trading week. Bye, guys.